Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today's another episode of the Mortgage Guy Podcast, and today, quick Fed update, OHFA update, and just a little FYI. All right, so nothing too serious. It shouldn't take too long. Let's just start off with the Fed. No rate cut. Haha, shocker. As we've talked about before, I've mentioned on multiple podcasts, we didn't expect a rate cut until September, although the executive branch has been putting a lot of pressure on Jerome Powell on dropping that rate. It just didn't work out. All indicators show that inflation's tamed. He is being overly cautious in my mind, but it doesn't really matter what I think. And just kind of waiting to see if tariffs do have a little bit more of an impact on it. We'll see. Job market looks good. Everything else looks good. Indicators look good. Time to bring them down. But anyways, we'll get there. We do expect still in September a quarter of a point hit or a drop, should I say, in the Fed rate. So we'll see. It might spur a little bit of activity on the refi business. Not a ton, but people that might have closed in 24, 23, that might have been in the upper mid-sevens, it'll make sense to pull that trigger. Hell, it might make sense now to pull that trigger. But hopefully as we approach, government lending approaches a par rate in the low sixes, 6% range, that'd be great. That'd be good for the market. Help that purchasing power for some buyers out there because it is tough sledding. So let me tell you. Yeah, I don't have my cup yet. I was lazy. Anyways, let's go to OHFA. So if you remember, first week of July, around the 4th of July weekend, I had a podcast and we talked about the changes that they made. We switched their down payment assistance programs for 5% down to 3.5% flat. There's no 2.5% option, no 5% option anymore. Just to cover those bases. And they went through a pretty big rate change. I talked about that around that time as well. And they came out with some, and again, I'll throw out an APR out here. This is not me disclosing our costs or anything like that. It's just a standard fee, or standard cost, sorry. On July 1, the rates freaked out. Like the Ohio Heroes program was lower, of course. I'm not even going to go into that because it's such a small piece of this market. But the standard FHA, VA, USDA loan through OHFA, again, no down payment assistance, was sitting at 5%, which was crazy good, right? Smoking everything in the normal market. But as I talked about with those attractive rates and costs, and there's some costs involved, I said their turn times would probably start to slow, right? Might take a little bit longer. Well, after 30 days, their turn times is taking about 10 days. So I think they saw the writing on the wall with a volume increase, and they probably try to slow it down a little bit. Because remember, we haven't really seen any increases in rates. It's just been doing this, right? It's been pretty steady over the last 30 days. But obviously it has to be volume related because the rate today, that same standard FHA, OHFA, no down payment assistance, or USDA or VA, is now 5.625, right? So that's 0.625 increase in the rate. Obviously, they started this thing out way too low, saw the volumes jack up. They got behind. They're like, we got to slow this down a little bit. Even at 5.625, that's fantastic, right? So I don't know if it's going to slow down that much. I expect their turn times to continue to grow. So I would think in the next couple of weeks, it'll probably be around 13, 14 days and go on from there. July was kind of a weird month in loan originations. It was actually down compared to June and May. Very odd month for new applications. I'm happy to say that me personally, I didn't see a slowdown. Hell, it took 10 this week, which was crazy. So hopefully August and September look to be a pretty big months coming up, and I think OHFA's turn times are going to suffer because of it. But let's talk about loan preparedness. So I only wanted to bring this up, and I've talked about it before on the podcast about preparing yourself to purchase a home, not go find a house and now let's go see if I can even buy it. Terrible plan, right? Puts you in a sticky situation. Not ready. Could have a worse credit score. It could be impact your rate. You may not have your savings that you need, job time, whatever it might be, right? No ready, fire, aim stuff, right? It's time to ready, aim, fire. So I say this because I had 3 face-to-face pre-approvals this week. Specifically, those pre-approvals were for getting ready, not do I qualify? I want to buy a house today. It was truly getting ready. So I thought that was fantastic. I want to applaud those individuals for preparing themselves and getting ready. 2 of them, they can buy now. It makes more sense for them to wait a little bit just because of savings, credit score stuff, but they have the ability to do it now. So I want to encourage you, if you want to jump in the housing market, even if you're like, I plan on buying next year sometime, start now, right? Get in there with your lender, us, or whoever you want to use, and make sure you're going through the credit reports and you're doing this preparedness. So let me give you an example. Let's say you have no intention of leaving your job, but you're hit and miss on hours. You maybe have some, no pay, no penalty stuff, right, at work. In our industry today, they've been wanting to average income like a son of a bitch. It's just constant, nonstop. And I had one today, actually. The year-to-date income just didn't quite add up based off what their hourly rate was. So this is something that you can have done, right? Let's go ahead and go conservative. Let's get the pay stubs, review the income, do the average, if there is an average, and you're not hitting your hours that you need. That way you don't have any kind of misconceptions of what you may qualify for down the road. Let's play it safe. And then you can be advised, hey, we need to fix this. We need to correct this. Let's hit the 40. Let's hit more, whatever it might be. And we can advise you on the job time. We can advise you on the income calculation so we can make sure our debt ratios are correct. Same thing with credit readiness. That's probably the biggest one, right? I had a very young couple in here today, and fantastic. We can get them ready to go now, but they also agree that if they wait 6 months, that they're going to be in a much better position. And I totally agree. But we want to get them ready just in case that correct house, that perfect home in the right location, the size, the cost, everything, if it pops up, they know that they can go after it. Might have a small impact on their payment, rate-wise and stuff like that, but they have the ability to. That was the important piece. But on the credit side, it might be a thing that you're thin credit or young credit or no score on credit. So doing verifications of rent, thickening up the credit profile using alternative sources like utility bills for 12 months and car insurance and phone bill, just to make sure you have the ability to purchase if absolutely necessary. And we can advise you on those steps, what to pay off, what to pay down, how to boost the score. We can do all that stuff. So I want you to think about that. And the asset validation is the next piece that I want to just touch on briefly. If you really do need a down payment, and it's another example that I had a client in yesterday, and kind of wanted to go USDA. It wasn't a high price point or anything like that when we were doing the pre-approval. But unfortunately, just with the pay structure and his debt ratio, it didn't quite work USDA. So I had to look at an alternative option using FHA with down payment assistance through OHFA. Well, it was thin credit profile, no savings. So the only way we were going to get it to fly if it was an automated approval. So we were prepping him, and we kind of backed into it to make sure we had and kept the approval. How much to ask for closing costs, how much savings that they're going to need officially, just to make sure we keep our approval. And that's what we did. We worked the file until we got that approval based off of his income, and we did the calculations and the asset calculation and the savings pattern that he needs to have, and we got our approval. I told him what to do, and guess what? He's in the process of putting an offer in, right? We have a plan in place. So that's just an important piece of this. And if you feel that you do need a large down payment, depending on your situation, we will collect your bank statements. We will comb through it. We can create a budgeting or budget plan for you to create a savings pattern. All right. We can do a lot of stuff. Okay. So I highly encourage you, if you're looking to purchase in the next 12 months, start now. I'm not saying you have to buy now. Get prepared now. Okay. Get prepared now. So when you find the right house, you are ready to pull the trigger. Okay. That's all I got for you guys this week. I hope you have a great week. I am going to be off in Florida. Yay for me. August, Florida. It's going to be cold, really cold. Oh. Anyway, I'm bringing like 12 pairs of underwear for this trip. So anyways, guys, I hope you have a great week. Remember, subscribe on YouTube. It's free. Click the button. Share it with your friends, right? Great information. Help your buyers out there. If you're a realtor, share the content. Check us out on Apple Podcasts and Spotify. Catch y'all in a week or two.